ANZ has recently come out and said Australian house prices won't grow as much as we previously thought. What does that mean? In this episode, we'll go through how actually more recent data has come out that could completely force ANZ to do a U-turn. Data that could actually tip Australian house prices into a more severe crisis in just 5 years. We'll go through the areas where this crisis is likely to be the most severe and intense. And at the end of the episode, stick around because I'll go through the areas that I really wouldn't touch with a 10-foot pole. Lots to cover, let's go.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
So here's the most recent update from ANZ, and they're actually saying that Australia in 2024, this kind of grey colour, is only going to grow by just over 5% in terms of residential house prices. Before, they had that as even higher. Now, context, the big banks are always wrong, and I'm not agreeing with them, but let's see how they've changed. Sydney, they actually had tipped to grow much higher, above 5% now, and they've brought that right down. I actually disagree with that, and I'll go through reasons why shortly. Normally, I'm not bullish on Sydney at all, and I'm still not bullish on Sydney from an investment thesis perspective because the yields are so terrible. You can do much better elsewhere, but I do think Sydney house prices will grow between 5 and 10% in 2024. Melbourne, it's showing to grow about 2 to 3% in 2024. I think that might be right. I've said a lot of times Melbourne has a lot of value because it hasn't done a lot. Even during the COVID period, it didn't really go up so much. So there's a lot of implicit and stagnant value in Melbourne compared to price differentials versus Sydney and Brisbane. Long term, we always go back to equilibrium, but I think I'm not so bullish on price rises just yet. Brisbane, they're expected to go almost up to double digits. I think, save and accept any changes in data that may come out over the coming months. I think Brisbane may actually see double-digit growth this year. Definitely think Perth will get double-digit growth, perhaps more than what they're suggesting at around 10.5%. It's gone up so much, I could be wrong on this, right? Adelaide, we're not buying there anymore. It's past the ideal buying window, but it keeps steaming ahead. And I think, look, it may be with the flight to affordability, if interest rates don't drop this year, that people still clamor into Adelaide. Well, that will just mean that when it does correct, like all housing markets do, it could be a little bit of a hard landing, but let's see how that transpires. Hobart is basically flat and Canberra basically flat, as is Darwin, which I don't disagree with overall. But after ANZ released that update, there was a new data release which could completely undermine it. Systemic policy failure compounds Australia's housing supply challenges, HIA warns. So Australia's population reached 26.8 million in September 23, more than a decade ahead of Australian government's own forecast, according to Tim Reardon, chief economist at the Australian Housing Industry Association. The intergenerational report in 2007 projected Australia's population would not reach 26.8 million, where we are right now, until more than 10 years from now, 2034, 2035. So the government got Australia's population forecast wrong by more than 10 years, and therein lies the problem, my friends. Here's the problem quantified: dwelling construction versus population change. This green is the population change. You can see how it's booming, 700,000 new migrants, and you can see the approvals and completions in buildings, or even commencements for that matter, are in these other colored lines all the way down to 200 to 250,000. Now, to put that into perspective, I'll quote you what Louis Christopher from SQM said. He said that 100 350,000 total dwellings are on track to be completed by the end of 2024, like new dwellings in 2024. That's according to the ABS. The long-term average, okay, even when population wasn't so intense, was 200,000 a year. So we're less than the long-term average, even when population was lower back then. What we need to build is 240,000 every year for the next 5 years, which is about the government's target of 250 a year, a million over the next 5 years. So given that government's target is not going to be met, we need to bring down immigration. Now, immigration is running at about 350,000 this year. You know, they made those changes, they've brought it down from 500,000, it's running at about 350,000. That needs to be brought down to just 130,000, okay, almost a third. 350 down to 130 to be in equilibrium with how many houses are actually being built. The government isn't bringing it down from 350 to 130. Okay, that's almost a factor of 3 that immigration is running too hot by. The natural population increase of Australia, births minus deaths, is 100,000 every year, and we need it to be a total of 230. Natural 100 plus 130, which is immigration. Right now, it's running at 350, which is immigration, plus 100. That's 450. We're screwed. A new forecast from the Urban Development Institute of Australia, the UDIA, warned that only 79,000 new homes will be finished in 2026 across the combined capital cities, a drop of 26% compared to last year. So I just went through some stats of like 2024. They're actually expecting this thing to get even worse. Here's the look ahead according to the UDIA. So Melbourne, they're expecting greenfield housing completions, these red, to go down, 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 down. Multi-unit completions to also go down, so that's like units and townhouses. Sydney is also down. Multi-unit, not so much, but still down. Southeast Queensland, greenfield is slightly flat, and I'm going to get to that in a second of where you need to be careful about buying. Multi-units are a little bit down. Perth is pretty flat, and that's actually good because Perth right now, it has the most severe chronic shortage of housing. So I'm glad to see that at least that's not going backwards, both in terms of units and greenfield sites. Adelaide fairly flat and ACT fairly flat. So right now the biggest shortage is in Perth, but where it's getting worse and worse is Sydney and Melbourne. If Australia is facing a housing crisis now, then what it might be facing in a year's time may need a stronger adjective. We're basically screwed. Because houses aren't coming out of the ground, that's why the existing houses, established houses, their values are skyrocketing, not just now, but this phenomenon has been around for a decade. This from Longview shows how residential land value as a proportion of total national assets compares to the domestic stock market or equities market. So this blue line, residential land values, you can see as a proportion of total assets or national wealth was 35% back in 2012, and now it's approaching 50%. Whereas you compare that to domestic equities, it's always hovered around 15%. From a capitalistic perspective, the best time to buy residential real estate is now, because this 50% number is likely to become 60%, 70% in the years to come as the scarcity of land is further exacerbated. But I want to be balanced in this commentary. It's not a case of putting a blindfold on, unlike during COVID times, and just shooting a dart at a map and making hundreds of thousands of dollars. There's certainly areas where there is a lot of supply right now or coming on board. So you still need to be very strict and diligent and know the data in terms of location selection for investing in real estate. Here are some areas where I would need to do double, triple, quadruple checks before putting my own hard-earned money. The number one area where there's the most building approvals, most amount of supply coming out of the ground, which of course is the enemy of capital growth, supply demand, is Casey in Melbourne. So if this is Melbourne, this is the Casey area just past Dandenong, and you can see it's actually really close to places where I have property like Frankston, but I want to be impartial in this commentary. So if you're looking to to buy around Endeavour Hills, Hallam, Hampton Park, etc., Cranborough North. I'm not saying don't buy there, but I'm just saying that there is a huge opportunity cost because prices may not grow as much as you'd like them to and versus other areas nationally. Another area, a favorite of a lot of folks, is Melton in Greater Melbourne. There's 4,600 new approvals coming out of the ground over the coming years. Now, of course, the Melton story goes, there's railway, there's a whole host of hospital and other infrastructure implementations and upgrades. But what if those things don't happen because of the state government being completely bankrupt? What if some of those things aren't transpiring to the extent that we think so? And with so much supply coming on, once again, if my mum was asking, hey, where should I invest in property? To be completely ethical, I would not recommend Melton or these surrounding areas at all. Another one in Victoria is Wyndham in Greater Melbourne with 3,800 approvals coming out of the ground. You know, Hoppers Crossing, Laverton, Point Cook, Truganina, Tani, around this Werribee area. So many people made hundreds of thousands of dollars in the last decade between 2014 to let's say 16, 17, in the last huge Melbourne boom. And you know, they may have some confirmation bias that, hey, these places have served me really well, PK. How can you say don't invest there now? But right now, with demand not being through the roof nationally and definitely not in Melbourne because of the state law changes, with supply coming on, it actually makes a bigger dent in sentiment and house prices than it did in the last decade when demand was actually going up every single year between 2012 to 16. So right now, supply is the enemy of growth and there's thousands of new blocks being developed here and I would not put my money there either. Not to say it won't grow, but once again, it's about optimizing where you invest so you can get the most growth when comparing 15,000 suburbs nationally. And then there are other areas here in this table where you should be a little bit cautious. Now, Logan, I'm not saying Logan's not going to grow. Logan's a large city council, but once again, you need to be very prescriptive if you're buying there, where you buy, because there are 4,200 approvals coming out of the ground. And you might be surprised to see Brisbane here. Now, I just predicted at the start of the episode that Brisbane would go in double digits. Well, let me share. Brisbane City Council is the largest local government or council in Australia. So when you see a large number like this, 3,100, don't let it scare you. You know, as a proportion of the denominator of total dwellings, that's pretty insignificant. So at least my clients, they know that I teach proportions, relativity, thresholds, weightings, as opposed to absolute blanket statements in how I mentor them. And that's how you should also see the world, where relativity impacts prices, housing market forecasts, and economic growth more than absolute numbers. Otherwise, Sydney would always outperform every other market because it has the most immigration, but that's not how it works. It's relativity that's important. So house prices are definitely going up. ANZ's forecasts are probably a little bit soft because of this bombshell housing supply statistics that have just recently come out. In my last episode, I took us through how right now we're in an economic crisis in Australia, but how that doesn't necessarily relate to house prices drops. Go check that out for lots of more charts and data. Lastly, the most important real estate is the 6 inches between your two ears. Invest in that first to level up. I'll leave links below to the Facebook group with 50,000 amazing community members, Australian Property Mastery with PK. Thanks for tuning in and see you next time.